Very good morning, good morning, good morning to everybody. Welcome to the opening bell. Before we get started, remember the information we discuss in this video is opinion and should not be construed as advice in any way. It's good to be with you here. Ashley Reeve here with the opening bell this morning. It is the 9th, guys, of March, and we are pushing full steam ahead. I hope all of you guys had a fantastic weekend, and we are back with another one. Now, last week, markets became nervous, guys, because of the conflict in the Middle East. It obviously intensified, especially about Iran and Israel. One of the biggest concerns there was the Strait of Hormuz, one of the world's most, important oil routes. And because shipments through this route were disrupted, oil prices surged, energy supply fears increased, and a lot of inflation concerns returned. This created a lot of uncertainty across global markets, but the question is really what is happening now? Number one, oil prices has jumped over the $100 a barrel, all right, and we can see it right there, reaching levels not seen since 2022, and you can clearly see it over here. This is the Brent crude, and some Middle Eastern producers are cutting production. Tanker routes are disrupted. Storage capacity in some countries is filling up, and oil is now one of the biggest drivers of global markets this week. And with that being said, we're seeing the US dollar has also risen to its highest level since late 2025. And when global risk increases, guys, investors move money into the US dollar as a safe haven. You can see it here. Last week, we had a very bad NFP reading there, lost 98,000 jobs. So we saw the push to the downside here, the open here, very, very big jump here, guys. That's about a 55 move already early this morning. And so global stock markets are falling. You're seeing while the rising oil prices and war risks have caused stock markets to drop, guys. U.S. futures, they fell. This is the NAS 100, the Dow Jones, the S&P. Asian markets dropped significantly. Go and check out all the Chinese indexes, the Japanese indexes. Tech stocks were hit particularly hard because remember, guys, when you have oil going up, we have a lot of cost that comes to these countries now. All right, so investors worry that the high energy costs could slow the economic growth now. All right, and that's a very important point. I mean, look at USD JPY, exactly the same. There's a dollar strength peeping through the 158.311 area. But there's some key political developments as well, guys. United States on that market, President Trump has demanded Iran's unconditional surrender, increasing the geopolitical tensions. In the United Kingdom, Keir Starmer has said the UK prefers diplomacy over military involvement, which created political pressure on the British pound. And obviously, Iran has appointed Mujaba, believe it, Khamenei as the new supreme leader, signaling continued hardline leadership. Now, this is a challenge, guys, because obviously we just had one of the supreme leaders taken out. If this regime, or at least the leadership, continues with what the previous regime had going on, we're going to get something else that's coming from an attack or military invasion, all right? And this does matter economically because the biggest current risk is the return of inflation. That's the thing. So it needs to be put to a stop real quick, and that's important, all right? Now, the biggest current risk from the oil perspective here, transport costs are going to rise, food prices are going to rise, manufacturing becomes more expensive, and central banks may therefore delay the interest rate cuts, all right? And that's very, very, very important. So maybe let's just have a look at some of these levels here. Now, Euro USD down at 1.15725, and we've actually hit some form of a support over here. Like I said, USD JPY has peaked over that level. If you're looking at the much shorter time frames, you're seeing that it is correcting at this point in time. The Brent price here, guys, we could be pushing down here to come and finish off this, this specific gap that created this morning at 88. I mean, from 88 all the way up to 115. That's a massive jump, guys. That's a massive jump. All right, that's a massive jump. The silver price is still bullish, goes without saying. We've not done anything extra. In fact, the structural component of the silver is that there's a higher low here and there's a lower high. So we're having both, or having to feed into both points here in the structure. That's a little uncertain. So we need price to either push above or come below for us to know what's happening with silver. Right now, it is consolidating. And then obviously here from a gold perspective, guys, we're seeing something similar here. We're seeing price that's creating higher lows, but also lower highs. So both of them have those structure points in place, both of them. And I think it's just important that we, recognize that firstly, and then obviously from that specific angle, we can then push forward. We'll need, gold to press down here for the dollar to really become strong. And right now, from a daily perspective, or at least on a monthly level, there's no sign that price is coming down here. All right, it seems like the FX and the commodities in this specific asset is separated right now. The correlation is not there. So you're seeing the stronger dollar come through on the FX side and not so much the commodity side. And I'm speaking here in specificity gold. All right. And then obviously we saw, a bit of a rise here in Bitcoin. A little bit of a rise, guys, not much, from the level of around 65,000 to about 67. When I say not much, I'm not referring to the value that you can obviously get from a return. You can push quite a bit of cash in that, in that push over there or in that move. But I'm speaking of the overall asset. It is still down. We are still seeing that Bitcoin has come back to the levels of 2024 and a touch of 2021. So this is a very important area because this is the place where price resisted before and continued going down, and it's the same place where price actually pushed up from. So we're looking at it from a double-edged sword perspective. We could either continue again from this place here, or we could come down once more. Now going down to 33,000, that's going to be interesting. I know for a fact that, look, if it had to come down to 33,000, we're going to see a lot of buyers flood the market here with crypto, because when crypto rose from this level here, all right, all the way up, we had multi-millionaires being made. All right, so many guys would want to grab this opportunity again. So they're watching the crypto space very, very carefully, and they're watching the Middle East very, very carefully. So that's what you need to do as well this week, guys. Starting off, please look at the big picture here. The three major forces that are driving the markets right now. One, the war risk in the Middle East. Number two, the rising oil prices. And number three, a stronger US dollar. Together, they are creating higher inflation risks, slower economic growth fears, and a more cautious, and becoming more cautious for investors. All right, but let's check it out. It is the first day of the new trading week. Join myself and T. We'll be looking at the CPI tomorrow, streaming that one live for all of you guys. So make sure that you join us in there. Have a good one. Have a good start to your week. This is Ashley Reeve here, guys. What a pleasure being with you this morning on the opening bell right here with TD Markets. Have a good one. Ciao.